Good morning, everybody. It is 8:25 a.m., January 10th. Markets are hard as hell to trade these days. You just don't get the follow through you think, right? Um, Really quickly, let's just go over what's going on in the market. We got the VIX up. We got TNX up. We got crude slightly up. Dollars up. And let's see, the Russell's down 0.38. Dow's down 0.45, ES down 0.45, NQ down 0.62. Selling bonds, so that's what we're looking at. Stocks, Bob is up 1.28%, BA's down 2.48, Google's down 2.25, and Netflix is down 1.34. Meta's down 1.14. So does the communication sector is getting hit. Let's see here. CRM's down, Disney's communications, and Roblox communications. Okay. Sectors, I'm going to say, yep, there you go. Communications down 0.85, followed by tech. No leader today to really speak of. All right. Let's look at. I actually have a slide that I saw that I thought was very interesting. I'm going to pull that up. So I saw this posted on Twitter. Just very interesting. This is the SPX, and these are all the range breakouts that have happened. And basically, the moral of the story is after every range breakout to the upside, there's been a downside move, which is pretty interesting. So, pretty interesting. And this is our current upside breakout. So, not surprising because we have run a downtrend, but just very interesting, right? Every time there's a breakout to the upside, there's a move to the downside followed by it, right? Just wanted to point that out. Thought that was very interesting. Um, I'm gonna go to a daily chart now of the SPY, just so we can go over the SPY here. Okay. So, what happened in the SPY yesterday? Now, I talked about this web of moving averages, right? Well, we cleared them all yesterday, but then look where we found resistance right at the bottom of this range. So at the bottom of this range, literally I have my 393.3, came up, tested it, sold off. Now, it was bullish at the top of this range. However, Fed Bostic started saying some very hawkish things. I believe he said that the Fed wouldn't be scared to get in the hole of raising rates. Overshoot, I think the word was. They're not scared to overshoot rates. So after that was said, it kind of took out the steam, and then everything that was where we opened yesterday here was all taken back. We went right to the top of the range, right to the 100-day moving average, right? So that's what happened in the SPY. If we look at the Qs, now the Qs had a resistance level and I had a supply zone on futures right here, and that hit the resistance of line right here. You can see right here that, and it ticked down and it fell below the 20-day moving average. Okay. Now the one thing that's really noticeable in the Qs is this 261 level. That, boy, we revisit that again, that's not going to go good. And in the macro theme, I believe we do have more downside to go. You could see this 261 level is just, yes, we made a new low here, but look at this. It's been defended so many times, right? Even if you go to a weekly, just this is just once, twice, three, four, five times begging. It's begging to get broken. So you could look at a monthly. Look at that. 1, 2, 3, 4 months. 4 months, 3 months with almost equal lows. I mean, if we come back down here, man, that could cause some capitulation. So, just wanted to point that out. All right, let's look at that TNX. 10-year yield was down yesterday, but now we're moving up. So, remember, up is down. Up is up is inverse. It's inverse to the market. So up would be negative for the market. So keep an eye on that. The VIX is getting elevated again. Now we have Powell speaking today. No surprise there. We have CPI on Thursday. No surprise with the volatility rising. The dollar, I said, broke key support yesterday, right? So this key support level here was broken, but now we're starting to come, made a double bottom almost, and now we're starting to catch some bids today. Don't know what we're gonna see with that, but should keep an eye on that. Okay, let's just look at the Dow. We haven't looked at it in a while. The Dow had the golden cross with the 50 crossing the 200. The Dow, healthcare took a hit yesterday, so we have to see. Broke out of this range, same thing. Have to see here. Russell. Russell hit the 50 and the 100-day moving average. They kind of look the same as the other indexes, which is fine. All right, so let's get into futures. First thing I'm going to start with, I think this time I'm going to reverse it a little bit. I'm going to go to the 60-minute chart first, just to give you some context of what I was seeing. Give me 1 second here. So I'll bring you over to the 60-minute chart. What I'm going to do, I think I'm going to change it to a 4-hour chart. All right, and what I'm going to do also is just hide all my drawings and make it just clean. Okay. Okay, so in futures, right, we came up. Give me 1 sec, guys. My Epic pen is giving me little issues, but I will fix that in 2 seconds. Okay. Just in the ES, some clear things going on here. I just wanted to point out some structure with a 4-hour chart. So now, in any other market, but not this much headline risk yesterday, in Powell speaking today, in CPI coming, right? This breakout, I would have been very confident to move here. The most traded price of the last year at 399.50. That would have been my target, and I would have been confident to put a trade on to go to here. However, this market has so much headline risk that I was not confident in doing that. So I stayed on the sidelines. I expected something like this to possibly happen, and it did. Because look, yesterday we had Fed speak. Fed just look, headline risk. We were in a bullish imbalance to the upside up here. We were looking good. And then all it took was that Bostic, and it took it all back. We went right back to the range, right? So that was what happened, right? So And you can see very clearly there's two nodes. Now we have the most traded price of this year, which is 38.32. This is only from the beginning of this year. But you can notice that it has a big node right here, and we have a big node right here. So this is our playground right now. Okay? Until something happens. Now we have CPI coming up, so that definitely could get us out of this range. Because now the only thing is this, and again, this is where this market's so hard. Now, normally, if this would happen, and this is our balance range, let's say, right? Normally, when you break out, the first move is a move. And then if it comes back, then that means that it was just a test. Now, usually with balance rules, if you come back, test it, fail, you're going to come back and go to the most traded price of the week or the month, and then usually you'll go back to the bottom of the other range. Okay? But now this could still happen, and this might be in the cards because I don't see Powell being dovish today. I mean, he has been nothing but hawkish. So this could happen, right? And then what happens? All this move is going to get negated. And then what could happen is we could come back up here and balance for CPI. Okay. Now, as far as the Nasdaq, right? Let me just put my my levels back. All right, so let's go back to the Nasdaq. Now, the Nasdaq did have a level that I was looking at yesterday. Okay, the Nasdaq. This is 4-hour Nasdaq. Okay, so I was looking, to be honest with you, when I saw the extension, I said to myself, once I saw we moved, we got some continuation out of the breakout, I said, this supply zone here and this resistance level was attractive for a short. It was very attractive. We've come in, this supply zone started here. We came in here before and we had resistance. Okay, well, look, we had resistance again. However, that looks good in hindsight. But when we were up here, we were building value. See this right here? That's the most traded price of yesterday. So whenever you have that bullish imbalance, that's what it looked like. It looked like it was going to try to go higher. But that news changed everything. And the news ignores technicals. That's why we came up and then we just took back a whole move, right? So that's very important. Okay, that's very important. That I almost thought about maybe taking a stab, but I was like, I don't really like the profile. It looked like it was gonna burst up to the upside, right? But then the news changed everything, so you really can't plan for everything. So now look, the Nasdaq has a larger range now. Look at this larger range, right? And then we have this range, like a micro range here too, that we broke out of, right? Now we're back. So now we're back, and you can see the most traded price of this year is right here at 109.83. I believe, and we have some supply that formed right here. So I believe because we failed to go higher, and Powell, I believe, will not be dovish. He hasn't been. Now, what he might say something that will make the market think, pause, or whatever, or less. I don't know. But he has been nothing but hawkish. So this is not like I'm telling you I'm just shorting when he talks. I'm just saying that that's what I believe might happen because of the bounce rules, we broke out. Now we're coming back in. All these longs are going to have to liquidate when we can make our move to here, this area, and then eventually go back to the bottom. Now we could break the bottom, or we can come back up, bounce in here again, waiting for CPI. That's what I this is where I see a part of a play today. I can't see Powell being dovish. I just can't see it. Okay, and CPI, they're expecting it to go down, um, which I think, like I said, it's very hard to say. This market's very tough to read, but that's something I'm looking at today. I just wanted to point that out. Okay. Now let's go into, now that I showed you that, I can go straight to the market profile. I don't really need to go into the other market profile right now, just because I don't feel like that. Right, with the candlestick charts, it's kind of showed you what I'm seeing, and now we can just narrow it down into the market profile. So let me bring that up. And you can see right now what we're doing. Okay. And yet, you know, too, I was speaking about it earlier, you have that just web of moving averages. Like they're all tangled within each other right now, you know. So, like I said, what I'm looking for is, I don't know how much volatility is going to happen with Powell. So I really don't know, but let's see here. But right now, okay, price is here, 38.94. Okay, right at the 20-day, almost at the EMA, the 9 daily EMA too. Okay, like I said, and here's the 100-day. I mean, this is just a web of moving averages. All right. Now, let's see here. We have the monthly VWAP too at 38.75. That's January's VWAP. It's right here. Market could bounce there, right? So we're gapping. We're gapping lower. Here's yesterday's low, yesterday's high. Okay, overnight high, overnight low. Now we are almost 100% net short. Okay, I think the trade for what I'm seeing right here is, since we're 100% net short, I think we could definitely, let's get this into scenario form here. Now remember, Powell speaking in 15 minutes. This is very preliminary scenario. I don't know what's going to happen, right? Because he's speaking before the market opens. Obviously, you could trade futures right now if you wanted to, but anybody who just trades equities, you know, SPY or whatever, you only can start at 9 o'clock. I'm sorry, 9:30. So this is what I can see possibly happening. I can see us filling the gap, hitting the 100-day moving average, and then it's just re-roll over. And I'd say I'd probably target 38.60, which is the most traded price of the month. I definitely can see something like that happening, especially if Powell's hawkish. Okay, especially if he's hawkish. That's really kind of what I'm looking for, because we just tested outside of balance and now we're coming back. And there's a lot of other news that came out, like Taiwan Semiconductors said they're down 2% for the quarter. That's not good for the chips. That's not good for semiconductors. Just just very interesting how the tides turned. The TNX is up today. It was down yesterday, right? So the tide has turned again. CPI is coming out Thursday. Very hard market right now. Okay. So this is what I can kind of see. You know, of course, if something happens where the Powell says something bullish, of course we can. Now, this is the only scenario I would see, is like if we fill the gap, come up to the 100-day, punch through, hold it, and then we can possibly see a move higher, right? However, like I said, you're going through the psychology of the market. All right, you have to think like that. The psychology of the market. Like you have to think about. I didn't get long on anything yesterday because I didn't want to be long. I didn't trust it, so I didn't make money from doing that. But I didn't trust it. Now I would have made money if I just got long off the open, but I didn't trust it, right? I didn't trust the move. So you just have to think. If you were long, let's say you were long since Friday, okay? You were long since Friday, and it went all the way up here, and let's say maybe you took some profit, but now it went all the way back here. You're going to be hesitant to want to go long again. Could it happen? It could. I'm just saying psychologically. I don't know if someone would be jumping out to be long in front of Powell, in front of CPI. Now CPI is softer, so maybe some people think they'll get in a jump on it, but I'm just talking about, psychologically. That's what I'm saying. Those balance rules. When you fail to move out of balance and come back into balance, usually you go back to the other end of balance. That's usually what happens. Okay. So I have to read the market, see where the strength is, right? I mean, these are just scenarios. So the same thing goes for the Nasdaq. We're almost 100% net short. We're about 90 to 80% net short. We're down here, gapping down. So you have yesterday's low here, right? So what I'm a little different. See, I like to set up more in the ES because the high of the overnight high matches almost yesterday's low. So I would say for a setup wise, I like the ES a little better. However, we can still come up to yesterday's lows, fill the gap, right? See, um, and then find some resistance, and then we could roll over. Maybe go down to this monthly VWAP of 110.16, okay? In this demand zone here. Now, when you're looking at some kind of setup, you want to see confluence, right? So, as far as the ES goes, why I like this setup better for the short is because there's a couple factors in that, right? And there's a bunch of them, okay? So I'm just gonna name why I like the setup in the ES better right now, okay? You have the close. Yesterday's settlement is right here at the lows. You have the 100-day moving average. You have the overnight high. All right here. That's why I like the setup in the ES. Okay. Now, like I said, I don't know. I'd have to really see some strength in the market to make me believe that we're going to start breaking out again. Unless Powell says something like super dovish, right? So that's kind of really what I'm looking at. Because my macro theme is balance rules. We're going to go back to the other side of balance where I'm going to look short. I really am biased short now. I don't know if I really would want to go long in an option play for a swing play or something like that at all. Maybe a day trade if I see something, but not really. So my ES short is kind of where I'm really looking at, because that I could definitely see us overnight shorts taking profits, and we come up here, and that really, do we fill the gap? If we fill the gap, can we move into range? If we can't, that's a short. So that's what I'm looking at today. Okay. In other news, crude is back into. I mean, I played a straddle that I made a little bit of profit on last time. Crude is back into this really large balance area. I can just show you guys that. Just wanted to show you crude again is now the 5 day, the most traded price of the week, the most traded price of the month are all together. You could see it all right here. Okay. So crude's about to break out. I tried it yesterday. Now you do have a little bit of a head and shoulders pattern here forming, right? With this trend line kind of as a neckline. So I'm not saying anything right now because it's really weird. China is just said it's gonna have opening up. It's gonna have a lot of oil demand. They're the largest importer of oil. So I mean we're making higher lows. So you got one, two, three, right? But we failed almost in here too. We were in balance and we failed here. Came back into range. Now we're pushing up again, but getting resistance here. So it's kind of hard to say. I would say I'm still macroly long bias in crude, but we have to see. I just wanted to point that out, that we're in that ultimate balance again, and we're gonna move down or higher from here. The big move's coming. Just have to see. All right, guys, that is gonna be it for me. I Give me a like, comment, or subscribe. Appreciate everyone who follows the channel. Stay green today. You guys know what I'm looking at. Powell's going to start speaking in 8 minutes, so that could change everything. That's why this is a little more briefer synopsis than I usually give, or analysis. So I'm just going to wait, and we'll see you guys, everybody, tomorrow.